Welcome to the Orca. Well, how big is the LNG Canada decision to the provincial economy? It's so large, it's going to add 0.2 of a percentage point to BC's economic growth next year alone, and likely more in years to come. But what impact will rising interest rates have? And what about a slowdown in real estate sales? Ken Peacock is the chief economist for the Business Council of British Columbia. He's just released his economic projections for 2019, and he joins us here in the Orca studio. Hello and welcome.
Oh, thanks, Rick. Good to be here.
To the layperson,
Yep.
0.2 of a point doesn't sound like a whole lot when you consider this is a $40 billion project and $40 billion of new money injected into the BC economy over the next 10 to 20 years. Why only 0.2 of a point?
Well, the quick answer is because the BC economy is large. I mean, $250 billion is kind of roughly what the GDP of the provincial economy is. So the LNG project, yes, largest in Canadian history, massive investment for BC and the BC economy, but it's spread out over 6 or 7 years, the construction, and so you get $3 or $4 billion spent in the first year. 0.2 is actually, from an economist's perspective, a significant amount, but from the layperson, it doesn't sound too much because it's just 0.2%, but it actually is very significant.
How healthy is the BC economy right now?
Very reasonably, I'll say reasonably healthy. I would characterize it as having a fair amount of momentum, but we are clearly in a slowdown period, and it's interesting. It's this exercise here, writing this outlook, is actually being quite interesting, Rick, because we are looking at momentum along with some cooling in real estate and some cooling in retail spending. So the consumer seems to be pulling back. We're hearing from our members, the large businesses in BC. There's some concerns on the horizon, but there's also this diversity, trade growth with Asia, the kind of underlying resilience, and that has carried the BC economy forward. So that continues to unfold, and that's kind of why we're in that space of about 2.3% growth this year, a little bit higher next year due to LNG, and not lower. It's kind of largely a momentum story.
Let's talk about the concerns. What are your members concerned about?
Well, the concerns, there's some concern about the outlook and uncertainty around trade and tariffs, and of course what Mr. Trump is doing in terms of escalating the tariff wars. That has the potential to actually be very problematic if China retaliates and we actually get a full-blown trade war. That's a concern.
We get caught in the crossfire.
We get caught in the crossfire and dragged down. When the U.S. goes down, we get dragged down. The NAFTA negotiations were a concern. Those are largely passed. But there's also this sort of policy environment. Canada's less competitive vis-a-vis the U.S. because of the U.S. tax cuts. That was always a card we could play in Canada and British Columbia. We had lower corporate income tax and lower personal income tax rates. That's no longer the case. And then if you're operating on the land base, there's a lot of complexities to operating on the land base here in BC. The regulatory environment, First Nations issues, rising costs, skill shortages are a mounting problem for many of our members, which pushes wages up and whatnot. So there's a few things on the horizon.
That was going to be my next question about the skill shortage, because the economy is held back somewhat, is it not, by a lack of skilled labor?
Absolutely. So we look at the job growth for the past couple of years, very, very strong, 3.5% job growth, stronger than kind of any jurisdiction in Canada by quite a wide margin. And then suddenly, at the midpoint of last year, it slowed right down, like literally job growth plummeted. It's barely inching ahead on a year-over-year basis now. And we think part of the reason for that is exactly what you said. There's not people to fill these positions. It takes companies longer to fill positions. The vacancy rate, the job vacancy rate in British Columbia right now is about 4.5%. It's highest in the country.
That's huge.
Yeah, 4.5% of all jobs are unfilled right now. I was going to say almost twice as high as most provinces, but there's some other provinces that are up around 3%. But there's a big gap between job vacancies in BC and most other provinces. So,
is the price of real estate one of the contributing factors to that?
Yeah, price of real estate's making it more difficult to attract people, I think, absolutely. If you look at the interprovincial migration flows between BC and Alberta, they've always been a bit of an outlet valve, if I can use that term. So when the BC economy is strong and the Alberta economy is not as strong, people tended to migrate to BC for jobs, for employment. And that pattern has been in place for decades. I can look at that going back decades. Again, midpoint of last year, they stopped coming.
But it's sort of a catch-22, is it not? You can't get the skilled laborers here because of real estate prices. If they don't come, real estate prices go down, the economy slows down, but you still haven't filled the jobs.
Still build the jobs, right? Yeah, I'm not sure we're going to get too much of a decline in real estate prices. Maybe a little bit in inflation-adjusted terms, but and maybe a little bit cyclically. But I tell you, Rick, if you just look at the fundamentals of the region and immigration, yeah, we might see a little bit of a dip in real estate for a couple of years. But if you take a 5 or 10 year viewpoint, it's tough to imagine that real estate not being more expensive 5 or 10 years from now than it currently is.
With all due respect, economists are they're negative by nature.
They are.
They're pessimistic.
We
by
worry
nature.
a lot, yeah.
But given what you've looked at and looking in your crystal ball, where do you see the economy of British Columbia going in the next 5 years?
5 years, I think. It'll be largely a good news story. And a lot of what has fueled the BC economy over the last couple of decades will continue to do so. And so I said I'll go down a little bit of a rabbit hole in a second here, but exposure to Asia, trade with Asia, China, immigration, and then these kind of coastal cities tend to do well. People move to the coast and like to live, and there's a vibrancy in the lower mainland economy. Urban agglomeration is a term that economists like to use, and this sort of notion of self-reinforcing growth. We've got a dynamic tech sector, film and television is doing well. So there's a lot of these factors that I think are going to continue to motivate and drive the BC economy. And residential real estate will come back and will be a growth engine again. But I just want to add in, there's something, and this isn't like really a formal forecast or anything like that, but there's something going on kind of on the West Coast, because BC over the past 5 years, strongest growth of all provinces by quite a margin. And then if you look at the south of the border, the states, all 50 states, Washington State also had the strongest 5-year average growth rate. So whatever it is, the dynamism of the coastal states and exposure to Asia, technology, these pieces are all adding up to create kind of a robust growth environment here on the West Coast.
It's quite a rudimentary rule, but it used to be that you could judge the economy of a particular city or a province by the number of cranes you saw, construction
We
cranes.
have a lot of those.
We have a lot of them, but you look at that sector, to the builders, to the developers, that kind of growth means a strong economy. What can they look forward to in the next 5 years?
So I think largely good news, and again I say that if we look at the next couple of years, non-residential building permits are up. They've recovered quite sharply, and that kind of points to more non-residential construction. And then large projects, the LNG investment is big. Site C is underway. The Patella Bridge is going to be underway shortly. There will probably be a number of other infrastructure projects, and so you layer those on top of the non-residential building permits. And the reality that I think, even if housing starts to slow in response to a weaker market, the provincial government's got plans for purpose-built rental homes, more affordable housing. So all that unfolds, and to me, I look out over the next 4 or 5 years, I see lots of construction activity.
Okay, final question.
Sure.
We haven't discussed the elephant in the room.
Sure.
Mr. Pola has put the prime rate up 0.25%, and he was speaking to the Finance Committee saying that be prepared for another increase, another. It could be up as much as a full percent in a year, 12 months from this. How does that affect not only the economy of BC, but when you look at the economy of the country?
It's a concern, and the central bank has articulated those concerns. The governor, Stephen Poloz, has said that's a downside risk, and if you look at debt relative to GDP, relative to the size of the economy, Canada and China kind of stand out, and a few other countries stand out as having the biggest increase in the debt load relative to the size of the economy. So Canadians have taken on a whole bunch more debt. South of the border, the Americans have deleveraged. They've managed to shed some debt, got rid of those houses that they were underwater on and whatnot a few years ago. In Canada's a very different story, more debt load. So think about mortgages, 5-year mortgages. I was looking at some numbers the other day, and within a year or two, about half of all 5-year mortgages that were in place in 2017 will roll over, and they're going to roll over, like you just said, at 1%, 1.5%, 2% higher. That creates some challenges if you have big debt loads.
Ken, I wish I could say it's been a pleasure. No, we should say the future does look bright.
I think it's pretty good.
But it's not going to be the upward trend a lot of people were hoping for. It's going to be slow and steady.
Yeah. And the big thing to take away from this, higher interest rates, slowdown in growth, although BC will still kind of top the provincial growth charts and do well in that context, but there definitely is some retrenchment underway.
Ken Peacock, thank you.
You're welcome.